Greetings. This is the eighth wonder of the world, introducing compound interest. Welcome, stock market investors. Today, pretty much, this episode is pretty much going to be on the financial sector, part three. But before I get into that, it's a continuation. My channel um, it was called Global Stock Investing. But the more I held on to the name, I just started to lose my motivation. So I, it, I pretty much been thinking about a name that's gonna give me motivation until the end of time. That's gonna pretty much pick me up when I'm not in the investing mood, or when I see other people. They just on YouTube. They're the way they're investing for the long term. Um, buying and selling and just getting all excited. And for example, they'll look at these, they get all excited looking at 1 day, 1 week, 1 month, um, 3 months, 1 year, all that. But in the long run, these are for traders. If you're a trader, okay, my hat's off to you. But a lot of these investors, pretty much they say they're long term. So pretty much this is the main focus. And as you can see, the market has been in the red all day today. But as you can see, sticking at my I've been at the 32%. So pretty much 3% even. And that's what I want to teach myself and teach you guys. Um, even in a down market, in a correction, to always keep your percentage, no minimum, 3% in a down market, so you retain your pretty much your capital. Because this is pretty much a big lesson for me that I learned. Pretty much when I hit this, I mean, as you can see, I was down 400, almost $500. And this, I've noticed people when they get like this, they start selling their stocks and all. They start selling their stocks because they start panicking and start getting emotional. But this was my first ride, so I recouped it all. So pretty much now, um, for this year, I don't want to repeat the same mistake, and I'm hoping you guys too learn this, from me, so you guys don't repeat this mistake and start getting emotional. But this game is forever. This game is not. When you buy a stock, keep it. If you believe in it, keep it. But if you're a trader, cool. You know what I'm saying? My hat's off to you. More power to you. Do the trading thing. But pretty much, if you want to build long term wealth, play the compound interest game, and that's what I'm playing, and that's what made me come up with the eighth wonder of the world, pretty much our eighth wonder of the world, which is compound interest. And that's why I'm dedicating my channel to compounding interest, the philosophy and mindset on investing, and not to be afraid and to hold it forever. You know, I don't know if you guys plan on living forever, but to pass it on to the next. I plan on passing this on to my my kids. You know, I'm not gonna sell. Not you see, as you can see, these. Um, I currently have 74 stocks. I don't plan on selling these. None of them. As you can see, I don't plan on selling none of these. They're 74. I'm gonna hand it over, and then my kids, I'm gonna teach them the game of the compound interest, and play that game instead of trying to um, add more stocks to a company and all that. I just think that's just you're putting that's putting all your that's high risk, because you never know with a company. Like, okay, say if Bank of America goes down, okay, I invested $28. I'd rather lose $28 than lose me having 10 shares of Bank of America and it going that going that route. My thing is pretty much to see how it grows through the year, um, these stocks, and then start adding. But I'm at 74 now, so once I get to my first 100, I'm gonna see how it is. Then I'll start doubling up. But I'm pretty much focused on sectors. I'm gonna go ahead and show you guys. I pretty much I have I broke down my own sectors. This is my global stock strategies. Pretty much, um, I'm invest there. I have a fire and ammo sector. I have a transportation sector. And you see these companies, I'm just buying one share of each. One share, one share. So these four right here will make up my firearm and ammo sector. So I have those lined up. And then I have transportation by one share of all these companies, which is 34 companies. And then insurance sector, likewise. Satellite communications, defense contracting, uh, raw raw material sector, which consists of lumber, steel, cement. I have energy sector. I'm breaking down the sectors differently from how Wall Street has it set up. This is more to understand it fully, like, because when they say consumer staples, and it's so vague, So pretty much I'm pretty much coming out with a new formula on investing to make it make sense to us. Technology sector, and I came up with these last year. 3D printing sector, the gaming sector, global banking sector, primary dealers with the Federal Reserve Bank of New York, the finance sector. That's where I'm currently at now. So I'm just going down, just breaking these companies down and trying to understand what I'm really doing in the long term, and not just getting all excited and watching the money fluctuate up and down, because it's gonna do that. It's gonna drive you nuts if you play that game. And I've noticed, and I've seen people on YouTube playing that game, and I'm trying to alleviate it and try to make sense and break it down elementary. Uh, then you have the cannabis sector, tobacco sector. Okay, and then index funds. This is something that I'm getting into, pretty much because last year I was pretty much 70, about 95% stocks, and this hit that I took. Hold on, let me show you. That hit that I took right here, that was due because of I was heavy in stocks. I didn't have any type of index funds, no bonds, ETFs, or no REITs. So now I pretty much my allocation for this year, 2019, is 60% stocks. Um, so pretty much I'll buy $600 worth of stocks, and then 30% index funds, so which that equates to $300, and then 5% bonds ETF, so that's $50, and then REITs 5%, which is $50, so that's 1,000. Pretty much allocating it that way, and just watch it grow. Pretty much, let me go through all these sectors right quick before I get into my true inspiration. What made me come across this concept. Okay, I have index funds. I have REITs, dividend stocks, uh, index fund, dividend stocks, pharmaceutical sector, the travel sector, which is airlines. I just call it travel sector. The mining sector. A lot of people don't know about the mining sector. Well, you probably know about Caterpillar, but there's a whole bunch. There's 24 other companies besides Caterpillar in the mining sector. Then you have I call it the supermarket sector. Pretty much, as you can see, all these companies that you'll find in the supermarket. International soccer sector, Manchester United. Uh, I have a holding company sector. Pretty much all these companies are holding companies, but they belong to some belong to the supermarket sector, some belong to the technology sector, but I've got my own sector where these are purely holding companies. So, and I have 80 of those. The media sector, telecommunications sector, waste management sector. A lot of people forget about waste management. There's pretty much 18 companies. The auto industry sector, medical devices, equipment sector, motion picture sector, home improvement sector, audio sector, fashion sector, fast food sector, coffee sector, fitness sector. Okay, private company sector. These are big names that you hear about, but they're not public. So I got those listed just to help me pretty much understand the market. between private and public and not get confused. So basically, I'm breaking this down elementary. There's the whole. I got the hotel sector, chemical sector, theme park sector, sporting sector, toys sector, intellectual property sector, cosmetic sector, water utility sector. Nobody talks about water utilities. There's a corn sector, sugar sector, and then a meat producer sector. So pretty much these are pretty much just to get you familiar with the different stocks out there, not just focus on technology. Technology, everything's technology. Just all these companies been around for years and years and years. So my plan is to buy this, hold it for decades until I'm gone, and pass it on, and then teach this teach this concept to your kids. This is keep it going. And never touch it. Never touch it. Let it grow. Let compound interest take effect. Okay, so that's pretty much the inspiration from that. I'm gonna show you guys a chart here from Warren Buffett. Pretty much what I saw this on a YouTuber, can't remember his name, but he had this chart and it just inspired me. And he just started talking about compounding interest. And I remember, that's why I got into investing because of the rule of 72. But the rule of 72 is pretty much compounding interest. And as you can see, at the age of 14, he started out with 5K. At the age of 15, 6K, 10K, 20K, and he was probably adding, adding to it, 140K, and it was picking up a little. And then at the age of 30, he hit his million. You know, um, at the age of 32, had 1.4 million. As you can see, it's growing. At the age of 33, 2.4 million without touching it. At the age of 34, 3.4 million. At 35, 7 million. At 36, 8 million. At 37, 10 million. At age 39, 25 million. At 34, at 43, 34 million. At age 44, 19 million. At age 47, 67 million. And then they said this is when um, compound interest just started to take effect after 50. So this is when at age 52 he was at 376 million. At 53, 620 million. At 56, 1.4 bill. At 58, 2.3 billion. At 59, 3.8 billion. At 66, 17 billion. At 72, 36 billion. And then at age 83, 58.5 billion. So this is all in the name of compound interest. This is what the eighth wonder of the world is all about. So and that's why I'm just simplifying investing with my channel, where it's not stressful. It's just once you buy your company, it's there for life. You don't touch it. You let compounding interest take hold. So let me go over the pretty much the compounding interest, what it's all about, the 10 reasons why compounding interest is the eighth wonder of the world. I'm gonna read this article. The words compounding interest are two of the most powerful in the investing world today. I'm going to show you 10 reasons why. So I'm gonna read these 10 reasons. As you can see, the snowball that's pretty much famous in the investing world that I'm starting to understand more and more, but it's due to compounding interest. Number one, compounding interest is the great equalizer. Compounding interest doesn't care if you are black, white, Asian, gay, lesbian, woman, man, or child. Compounding interest affects everyone the same because it depends on time. If you ask any person older than you what they wish they had more of, chances are they will tell you they wish they had more time. Precisely. That's what now that I'm learning at my age, I'm passing this on to you guys so you guys can pick it up at your age. Time is truly a wonderful thing, and it's something we all share in common. Com- Compounding interest works its magic because of this. It is a universal truth. Number two, compounding interest utilizes momentum. Have you ever wondered at what makes an avalanche so powerful? A force so massive actually starts from a very small place. Before before an avalanche can smash trees and break legs, it needed to become a snowball first, and a piece of snow before that. Every great force you see in our world didn't always begin that way. A small piece of snow becomes an avalanche by first becoming a snowball. At first, the amount of force and energy to create a snowball must be great. Snow needs to be continually added with an almost intense effort. But once the snowball is built, then you can roll it down a hill and it will naturally do the work for you until one day it is an unstoppable force. That's where I'm at. That I am building my snowball. So pretty much once I hit 500 companies, that is my snowball. So once I hit 500, I'm going to roll it down the hill. And I'm currently at 74. So this is baby pretty much my goal is month to month, year to year, baby steps. Your wealth works the exact same way. The work you need to do in the beginning is often very painful and tiring. That's where we're all at. But once your wealth snowball is built, then your wealth naturally attracts more wealth. Then the power of compounding interest can work in your favor. Just as a snowball compounds and grows, so can your wealth. Number three, compounding interest can create millionaires from average people. The tired and overused excuse I hear over and over is that people think they don't have enough money to make good money in the stock market. The truth is, you don't need that much. Compounding interest can make you a millionaire, especially if you are young. Take the median income in the United States today, 50,000 a year. Now the average 25-year-old making 50,000 a year would only need to save and invest 10% and would have a staggering 2,434,221 at 65. This is just assuming conservative 10% returns in the stock market and assuming he never gets a raise. The real results could be much greater. The possibility of this is all due to compounding interest by investing in companies that are growing, thus paying out increasingly more cash to shareholders. An initial investment could multiply many times over in the course of a long time span. Don't underestimate this power. Number four, compounding interest teaches you patience. Why is compounding interest a greater teacher of patience? This is what I'm learning now. For one, you don't see results overnight. In fact, compounding interest is actually pretty boring. It can be like watching paint dry. Compounding interest at its core is best served by conservative investing. Someone who chases speculative and very trendy stocks won't see the power of compounding interest. You can you can how can you when your capital moves up and down wildly, growing fast and then crashing hard to remove all your gains? An investor whose primary concern is compounding interest will instead look for the company that is growing slowly and surely, like the tortoise who plods along at a painstakingly low pace. An intelligent conservative investment will beat out any high flying trend technology stock of the day, time and time again. There you have it. Number five, compounding interest lets you sleep good at night. What do the wealthiest and wisest investors have in common? They are always smiling because they are making money every second of the day. That's the power of compounding interest. Nothing can stop it from growing. As long as an investment is paying you interest, you can keep smiling at night because you know that time is your ally. The longer time goes, the richer you get. I wish I would have listened when I was 18 years old, when I was in the military, and there was a lieutenant, and I was deployed in Kosovo, and he kept telling me, invest in 1,000, invest in, and that's why that number sticks to me now because I regret taking his advice at the age of 18. I'm 40 now. So all that time I missed out on compounding interest. I started a mutual fund back then, but I think I got up to like 5,000, 6,000, where I'm at now. And then I took it all out and I just splurged it on life. So I hope you guys don't make the same mistake I did. So now I'm going back. Now I got to work even harder to even put 1,000 a month to invest in my portfolio. Because as time goes on, you will keep collecting interest. And as time goes on, you can reinvest that interest and get more interest. Viola, you have compounding interest. Take this quote from the Oracle from Omaha himself, Warren Buffett. I always knew I was going to be rich, so I was never in a hurry to. Number 6, compounding interest is your friend if you are poor. Rich people don't have any bigger advantage in the market than poor people do. My $500 in the market has just as much of a chance of making 10% returns as George Soros' 500 million. Sure, he may have opportunities than I do, but in any stock market security, pound for pound, we have an equal shot. So what if you are poor, penniless, and inexperienced? You are you hearing me, millennials? We have the biggest advantage of them all, and that's time. Man, I wish, wow. What kind of time, the kind of time that young people have today to compound their investments makes old hedge funds cats sal- salivate. That's why they are looking for the fountain of wealth. Will they find it in Botox? Only time will tell. But the same is true with your investments. Only time will tell if you are smart enough today to put some money to work. Number 7, compounding interest teaches and rewards discipline. One of the best pieces of advice my mentor gave me when I first started investing was simply this: invest the same amount every month. There you have it. So pick a number and stick to it for the rest of your life. Whether it's $50, $100, $200, $300, $400, $500, whatever your number is, stick to it and go from there. There's actually a name for this strategy. It's called dollar cost averaging. It's so effective because not only does it teach you discipline and good habits, but it prevents you from making stupid mistakes in the stock market. You can't expect to time the market. It's just a fact. The market is massive, facilitating trillions of dollars a second into and out of securities, futures, and commodities. Your guess at what it's going to do next is as good as the next guy's. Until you find someone that can predict the future, you're just going to have to face the fact that you won't be able to time the market. And that's okay. That's why you must deploy a system like dollar cost averaging. When you decide to put the same amount of money into the market every month, you automatically buy less when the market is up and buy more when it's down. It's classic buy low, sell high. By doing this, you resist being greedy when everyone else is greedy, which results in losing your shirt. Compounding interest is best pursued when you are dollar cost averaging. Use this system to your advantage. Number 8, compounding interest separates the rich from the broke. The great Albert Einstein once said, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. When the last time you saw a high interest credit card balance move much slower after making a payment? When you get into high interest debt, you are now fighting against the inevitable force of compounding interest. Why fight up a hill when you can instead run down it? While everybody might know that interest is bad, only a few people decide to do something about it. And if I can be quite frank, it's why broke people are broke and rich people are rich. Nobody makes a real fortune overnight, and nobody goes broke in one night either. The exceptions to the rule regresses back to where they should be over time. That's why lottery winners oftentimes end up broke years later. It's the habits that you live with which define your wealth. If your spending habits cause you to fight against interest, you are going to fight that fight the rest of your life. And sorry, but you'll never be rich. However, if your habits create interest for you, then just sit back and relax. You will one day be rich. You just have to let compounding interest do the work for you. Number 9, compounding interest can save our kids' generation. Let's face it, Our generation isn't very good at giving future generations a leg up in this world. It's always been this way. I mean, how big a mess has our parents' generation left us? It saddens me to see such disregard for the future. Every day we have people who live in a mindset of scarcity instead of abundance. People who are destroyers instead of creators. This isn't the world I want my daughter to grow up in. What if we lived in a world where everybody took responsibility for their finances? What if we all decided to kick our debt habits and wealth and build wealth for our family and future generations? That's what I'm currently doing. If $5,000 a year can turn into 2.4 million in 40 years, imagine what it would do in what it would do in 60. It would be 16,691,244, which is of course outlandish. Nobody has that kind of money to save for their kids. But what if we saved just a little bit for them, like 500 a year? In 65 years, it could grow to 2,691,112 dollars. What if we did this for our kids and they did it for theirs? The wealth could compound until the whole world was living with financial freedom. It starts with one person, but could later affect many. Really, it starts with you. If you want more wealth and abundance in this world, be the change. I believe in you, my fellow freedom fighter, because I know you can make a difference. If you're reading, if you've been reading all the way through, you're already better than 90% of the world. Why can't you take the eighth wonder of the world and do something great with it? You can, and that's why I believe. Number 10, understand compounding interest. I'm not alone. Look, here's 10 fantastical quotes from influential people and what they have to say about compounding interest. I'm going to just read the first three, but there's a whole bunch. First quote, leadership expert Lali Duskow said on Twitter, compound interest, it's important to get started now. CNBC superstar Josh Brown said, I try to explain the power of compounding to my young clients who worry about short-term volatility. And then the third quote, Gary Foreman from thedollarstretcher.com wrote, what is compound interest? It's interest earning interest. For example, suppose you saved and banked $100 a year ago. It earned $2 in interest last year. This year you'll be earning interest on 102 original savings plus the interest earned. That might not seem seem that might not seem like much, but understanding that simple fact can have a major impact on your financial success. Why is compounding interest important to you? Because it can turn just a few dollars today into big money over the course of a lifetime. Okay, so that's pretty much the philosophy on the eighth wonder of the world, compounding interest. So and that's pretty much kind of, I was feeling like depressed for the past couple of days, just trying to find motivation, and that pretty much motivated me to um, invest, because I started to get that feeling again when I was younger. I invested in mutual funds, and I invested it, and then I took that money and I spent it. And I could have grew. That could have been 20 years of growth. Just for that 6,000. That I had about 6,000 in there at 10%. So I think when I saw this number, my current portfolio, when I saw that, I was pretty much thinking to myself, I felt like I was gonna do the same, pretty much repeat the same steps that I did before. So this is pretty much different. So I'm going past what I went through in my past. So pretty much that's why I came up. I had to change the name just to get the feel and get over the error that, as when I was younger, I didn't want to repeat the same the same mistake. So that's pretty much why I came up with the name change of the eighth wonder of the world, which is compounding interest. So pretty much, I'm just gonna go over. I'm gonna give you guys that. I was gonna go over the financial sector, but part three, I'll do that tomorrow. I just felt like getting that off my chest and letting you guys know pretty much something to think about. I know these days, there's especially people in the north. Um, it's been snowing, and then I'm out here in California, and it's been cold, and just the moods of people has been pretty much down, and there's no motivation. So I was just these past couple of days just searching for motivation. I just came across that, and now it just pretty much gave me peace of mind. So with that peace of mind, I want to give you guys peace of mind and let you guys know that there's hope. Because I think without hope, you pretty much perish. So that's pretty much um, the day one of the eighth wonder of the world. Outro. Subscribe to the channel. Comment any questions or recommendations you have. Like if the content was inspiring for you. And share this information with other stock market investors. Until next time, let your compound interest make you a millionaire.